Okay, team, we're going to keep this one nice, short and sweet, but just want to talk a little bit about risk management. So as you can see here, typical trade, 5-to-1 risk to reward. You know, we like to kind of go. Let's assume that this is a nice demand zone and we want to risk, well, we're looking for a 5-to-1 risk to reward, right? But we don't know how to manage risk, right? Because it's like, what do you mean 5-to-1 against what? Well, the key components is two things actually. It's your entry and it's your stop loss, right? So the entry here is nice and easy. The white here is the white on this P&L piece here. So you've got 26,219. Stop is 26,103, and the TP is 26,798. Right. So all I'm going to do is head on over to something called calc.trade, right? So within calc.trade, what you've got is just a few components. Let's assume you've got $1,000 account, right? And for that 5-to-1 risk to reward trade, or whatever trade you want to do, you want to risk 3%. Okay. So the entry was, I'm just going to look at what the entry was really quick. Entry was 26,219. I think that's still the same, isn't it? 26,219. And then the stop loss was set to, what's the stop? 26,103. Just put that in there. 26,103. And then the take profit is, let's have a look, 26,798. 26,798. Now I know that that's a risk of 5-to-1, right? Now obviously 3% on $1,000 capital, so it's like, what am I prepared to lose, right? If this trade goes against me, what am I prepared to lose? So 3%, there's my risked capital there, right? $30 is what I would lose if I get stop lossed out. Now look, without going into crazy detail, this is completely irrelevant, this leverage tab, because we're actually telling the central exchange or the DEX or whatever our position size. So what you'll see here, this position size here, that's the key metric that says to us, okay, if your entry is at 26,219 and your stop is 26,103, forget about the exit, that's just a TP. But these are the two key ingredients: entrance and stop, right? Where you enter the trade and where you get stopped off. If you say my risk is 3%, and that's equal to $30, right, on $1,000 account, what that's saying is for you to just lose $30, your position size would have to be 0.259 BTC. And before that, on a 5-to-1 risk to reward, or just shy of a 5-to-1 risk to reward, for that $30 risk, you would win 149, or just shy of $150, which is, yeah, roughly equates to 5-to-1. And now obviously, you know, if we get a little bit nervous with our stop loss and think, actually, you know what, I want to give my stop loss a little bit of room to breathe, and we drop it down. I think you can drop it down right here. Yeah. What you should see is the risk stays the same, but the position size reduces relative to that same entrance and stop loss, right? So where you enter and where you move, the only thing that's changing there is the stop loss, right? Of course, the margin's changing as well, but the margin's just saying is, depending on where you are relative to a lot of different things, like I think if I go higher, yeah, stop loss of course was below, but the lower I go, the less margin I need, because the position size reduces. And so we've got $1,000 in our account, so the margin requirements are not a problem. So it's not something we need to worry about. So that's the key. That's that fundamental thing. The distance between your entry and your exit is the only thing that we're concerned about. We know that we want a 5-to-1 risk to reward ratio, though that's just arbitrary. It could be 5, it could be 8, it could be 2, it could be 1, it could be whatever it wants to be. That's not relevant for the risk. The risk is only really the entry and the stop loss, right? What are we prepared to lose? The risked capital will not change wherever you put your stop loss. The only thing that changes is the position size and the margin. But this is the piece that we're interested in. So when we go to enter our trade on, I don't know, here, like this is MEXC, the quantity for that trade is going to be whatever that calculated position size is, because it's going to work it out for us. That way you can ensure you know exactly what you're going to lose every single time and win. But it's a nice way to trade, because if you're trading with $1,000, really you'd only want to be risking 2-3%, maximum of 5% on any one trade. And actually 5% on a trade, you know, okay, $50 is what you'd lose, but actually you're going to win. Where's that? Where's that stop? Somewhere there. You know, you would lose $50, but on a 5-to-1, it's 250, right? That's what you. I'm just gonna bring that up a little bit. It's somewhere in that region. The distance between these two and that exit obviously is going to be somewhere around that $250 for that $50 risk. And so what should jump out at it at this stage is, if you're prepared to say, this is my risk tolerance, I'm always willing to risk $50 on a trade on a $1,000 account, or I'm always willing to risk $20 or $50 or $40 or $80 or $100 or whatever your appetite is for risk, right? That's always going to be down to you. Irrespective of where you put your stop loss, what strikes you is the closer and the tighter you have your stop, the more payback you will get, right? So like, and that's an obvious statement to make, by the way, but your risk doesn't change. Of course, the risk of you getting stopped out is easier, but you don't lose. It's still a $50 risk wherever you put your stop. The only thing that changes is the amount you will receive back relative to your risk to reward. Like, that's probably roughly around 1-to-1. So you can see the distance between entry and stop, and entry and exit is roughly the same distance, right, in terms of price action. So $50 risk, virtually a $50 return, right? So for that risk you get $50. That's roughly about a 2-to-1, not far off, about 2-to-1. So there's two equal measures to one measure. That's somewhere at about, getting close to 5 or 6 risk to reward ratio. So have a play about. The key thing, like I say, is position size. This is the key thing that we always want to know relative to that risk. So if you'd ever hear me talking about risk, what I have is a $50K funded challenge account, right? And so if I'm like risking 3% or 2% or 1%, even 1% is a $500 risk. And so it's relative to whatever you're trading, right? But the position size is always the same. So position size in this case, obviously on a 50K account with only 1% is actually 3, nearly 4 BTC. I just think it's a neat way to trade, because you always know where you are. You never just blindly putting a trade in without thinking, damn, what am I going to lose? And the further away the stop goes, the more money I'm losing. It's the wrong way to think about trading. That's just where you're over leveraged and you're panicking because you can just see the red going deeper and deeper. Fuck that. The way you need to trade is you need to know always your stop loss first. Where's my entrance? Where's the safety net? What am I willing to risk? Position size, lads, okay, and ladies. Always position size. Let this work it out for you. Job's a good one. Okay, cool. Speak to you soon.